Good evening, good morning to wherever you are in the world. Welcome back to another coffee hour where we're going to go over some of the macro news that impacts the stock market. We're going to be talking a little bit about Robinhood earnings. All right, today we also have some new funds that are going to be coming out, especially in the high yield space. So we'll be covering just a little bit of that at a high level. All right, so we're not going to be doing any prospectus diving or anything like that. We also have Palantir in the news, so we're going to cover that as well. So today should be a pretty interesting, a little entertainment value, a little interesting, especially for those of you who are invested in these names, or for those of you who might be interested in these types of, high yield, high income products. So first off, I want to say hello to everybody. So right now we have Skeptic in the chat. Hey, rock, pick, gold. I guess that's what it is. We also have Victor saying, hey, what's up, man? Hey, welcome back. All right. All right, guys. So we're gonna get started here. It's gonna be kind of a mishmash of stuff. All right, because I'm going through my news feed and I'm just looking and picking out stuff. All right, so this episode will probably be kind of like all over the place. It's not gonna have usually or like kind of a nice flow to it. All right, because as I was going through the news, I'm just picking out stuff, and of course, you guys know I only get about like an hour. Maybe an hour and 15 minutes really to prep for these streams, because I like to be on time, and 8 o'clock I think is a good time to start, because that's usually when everyone's at home, at least on the East Coast. Probably in the West Coast, everyone's kind of like driving around or probably getting off work. So I like to at least try to do it around here. So we have Letitia in the chat. Hey, welcome. I don't think I've ever seen you put a comment, so welcome. I think this is the first time I've seen you. All right, so welcome. Okay, so let's get into it, guys. Let's get into it. All right, so as always, welcome back. All right, so first things first, we're going to start off with the FinViz heat map. All right, this is public. You guys don't have to pay for it. You guys can go check it out yourself. But what this shows is just, again, it's how the day went, right? It's a visualization of the S&P 500. So we can see that, today was obviously not good. If you're looking at your portfolio, some of you guys might be down. I looked at my portfolio, definitely down, right? But again, I'm not only invested in index funds or ETFs. I have a lot of single stock risk in my own personal portfolio. So, I got to feel that. Plus, Bitcoin is also looks like it's probably starting to trend back down. Who knows? But for the day, we see NVIDIA down, 79 basis points. We see Google almost down 2% for the day. Amazon down almost 1%. Apple down 34 basis points. And then Microsoft down not even all that much, to be honest. So I got to get this fan going because it is starting to get a little warm up in here. And I know I'm wearing a sweater, all right? I know the irony. All right, so anyways, you guys can see this. Looks like, let's see what else. We have industrials also getting a little bit of a hit. Let's see what else we got here. Healthcare, Eli Lilly, not doing so hot. Berkshire up. All right, there we go. Asset management, we have Blackstone in the green, BlackRock in the green. JP Morgan is down. Bank of America is down. Good. Anything related to Bank of America going down always makes me happy. I am not a fan of Bank of America. Been with them for some time. And again, the predatory practices that they had or still have, I just do not like the bank. Anyways, let me get off my rant. Visa looking good. MasterCard looking good. Okay, so this is the heat map. Again, you guys can always check it out. It is always nice to see, especially on a day that wasn't doing so hot. So for the S&P 500, we are down 33 basis points. Not too bad. All right, this isn't really too bad. For the last couple of days, we've been actually positive. All right, so last week we had that huge sell-off. A lot of single stocks were hit pretty hard. Bitcoin was hit hard. But this week so far looks like the index is doing just fine. The Qs, which is, the NASDAQ 100, tech heavy, tech focused. We can look here, not doing so hot, down 50 basis points, almost 0.5%, over the last 5 days. Again, still kind of trending a little flat. All right. So nothing too extravagant or exciting there. Now for Bitcoin over the last 5 days, just choppiness, right? This is typical Bitcoin, right? But again, I really still think that we're going to be heading down to about the 55, 58,000 range, and some analysts are calling for about 34 to 37 a coin. So that is going to be disgusting if that does happen. All right. So a quick, well, let's take a look at gold. Gold is actually down a full percentage point. All right. In the day, it started off pretty high and then it just kind of sold off. I have not found any news why gold would have been dropping today. I did see some news about silver, which we're going to be covering here in this stream. I do know that the U.S. Secretary of Treasury has sent, some senior officials to China. This is a mid where China is actually dumping a lot of U.S. Treasuries right now, and they've actually put out a advisory note to their businesses, telling them not to buy U.S. Treasuries. Okay, so I think this is a leverage thing. I think probably the United States is starting to feel the pinch of countries offloading U.S. debt. All right, let's see, U.S. Treasuries. Let's see if I could find maybe some news on that. I did see it last. Excuse me, I did see it last night. I did not save it. So here it is. So real quick, since we're on the topic, yeah. So right here, we see that China is urging. Boo. Tomato, tomato, tomato. All right, let me go back. Go back to gold here. Where is the news? Fortune, let's see. U.S. Department of Treasury. Okay, well, I can't find it. But anyways, yeah, there was news by Bloomberg, yeah, basically saying that China is urging its banks to stop buying U.S. Treasuries, right? And then that's when, at the same time, this all happened yesterday. This is at the same time where the U.S. is sending some officials over to China to basically probably talk this through. China has been stockpiling gold like it's going out of fashion. A lot of central banks have. So, that has been kind of a telltale sign. One, obviously the world is getting sick of the United States alienating them. Two, loss of trust of the USD. And, we have never seen levels this high of central banks stockpiling this much gold in a very, very long time. I think I've seen some chatter out there saying basically since like World War II. So pretty damn crazy what's going on. Anyways, neither here nor there. All right, let's get into Robinhood, guys. This is for all the people holding Robinhood. All right, they just had earnings, and obviously the stock sold off. Right? Why would it go up? Right? But they did also missed, so this obviously deserved to go down a little bit. All right, Robinhood market stock slid 7.7% on Tuesday after hours trading as Q4 revenue missed, with disappointing transaction revenue as crypto revenue fell 38% from a year ago. Obviously, right? Meanwhile, average revenue per user was flat. With Q3 2025. The stock and crypto trading app issued 2026 guidance for combined adjusted operating expenses and share-based compensation at 2.6 billion to 2.7 billion, or up 18% at its midpoint from 2025. All right, so real quick with Robinhood, some people will kind of say that it's not a real proxy for crypto, but it is really involved with crypto. So when crypto traders are not trading or buying crypto or buying Bitcoin or buying Ethereum, and there's a lot of negative sentiment towards crypto, then Robinhood is going to take a dump. We see that happening with ETFs like Blocks, right? Blocks, the Blocks ETF, the high income ETF. We see that happening. We see MSTR, we see BMNR taking nosedives. We saw the Bitcoin sell off. So that all that stuff does impact Robinhood because it's traders or people buying crypto that are retreating. They're no longer buying the stuff, right? So Robinhood can't make any money off the spread. So that is why their revenue obviously slumped, and especially when we're talking about Q4, what happened last year, right? We had October, we had 10/10, right? That was Armageddon for crypto. That was when there was almost $1 trillion liquidated out of Bitcoin, right? That was one of the worst events to ever happen with crypto. So anyways, wanted to at least point that out because I thought that was a fascinating perspective where people will, again, kind of attribute what's happening in crypto land with Robinhood, right? Why Robinhood would be impacted. Q3 net revenue of 1.28 billion, trailing the 4 billion consensus increased from 1.27. So not really by a whole lot. I mean, you're talking 1 billion. They still missed the consensus. So that is also what contributed to the sell-off, right? In the previous quarter and the 1 billion in the year ago quarter. Average revenue per user of $191 was unchanged from quarter 3 on a year-over-year basis. It rose 16%. All right, so again, each average user is bringing in about $191 worth of revenue, and it looks like that just remained flat for pretty much all of quarter 4. Transaction-based revenue of 776 million, lagging the visible alpha estimate of 792 million, grew from 730 million in the prior quarter and 672 million a year ago. Crypto revenue fell 38% year over year to 221 million. Options revenue of 314 million rose 41% year over year, and equities revenue of 94 million increased 54% year over year. So options revenue seems to be the moneymaker for them. They also have, the prediction markets for Robinhood. And I don't think I saw that in here anywhere. Yeah, I don't see that in here. But anyways, here's some more good news, at least for Robinhood. Robinhood's quarter 4 total operating expenses of 633 million, slightly lower than the 635 million visible alpha estimate, decreased from 639 million in Q3 and increased from 458 million in the prior year's Q4. All right, so their operating expenses have come down, so that's obviously good. Net deposits were 15.9 billion, translating to a 19% annualized growth rate relative to total platform assets at the end of Q3 2025. All right, so this is a big deal right here, the net deposits. That's people moving money into Robinhood, right? So that's really good. So on a year-over-year annualized basis, they've been growing 19%. With the whole Trump accounts coming into the picture soon, that number, I think, is going to grow even more, right? And that could obviously be bullish for someone like Robinhood or anyone investing in Robinhood, because they're going to have more, assets under management, basically. All right, so let's listen in. There was a video on their earnings, so let's listen in. Oh, I hope you guys can hear this. I don't think, hold on. Let me fix that. I know you guys can't hear that. Yeah, hold on. I have to fix that. 1 second. Boom. We got to turn that on. Man, I hate StreamYard because I have to do this every time. Okay. All right. Let's listen in on Robinhood and see what the thoughts are.
Now, it's good to see you. Let's take Robinhood first. What are your expectations? I mean, the stock's come back to earth. What does that do for your expectations going in?
Yeah, I think Kate summed it up. Just to start with earnings, the street is expecting a 32% revenue growth. But as Kate mentioned, they're actually expecting a 34% decline in earnings. The Q4 2024 comps, I think, are incredibly hard. Obviously, why you see that. I think crypto trading will be down. And from a technical perspective, the stock is under the 200-day. And, as I like to say, nothing good happens under the 200-day. So I think in the short term, there could be some pressure on the stock. But I do think there's 3 big catalysts that are happening right now or later on this year that could have the stock move higher. And I'm happy to walk through those.
Well, go ahead. I mean, if you have 3, just name them.
Number 1, buckle up. Robinhood is now allowing short selling. So just like more volume, more stickiness. Number 2, the Trump accounts or the Gershner accounts. So thank you, Brad Gershner, for those. Go online July 5th. The Treasury is still figuring out who's going to be the trustee, custodian. Vlad spent a ton of time in Washington with Gershner on these Trump accounts, so likely they would be one of the choices. And then finally, the SpaceX IPO, if it happens, there's likely to be a large portion of SpaceX share go to retail, and I'm sure that Robinhood is fine for that. And so I think those 3 catalysts, especially the Trump accounts and SpaceX, are going to give more energy to the name later on in the year. So maybe it hits 65 before it hits 135. But I do think this could be a good year to start building a position in the company if you don't have exposure.
What do you think of the prediction?
All right, you guys heard that, right? Trump accounts, that's obviously going to be bullish for Robinhood. You have the SpaceX IPO that's potentially coming later this year. So that would be, that will, some of those shares, right? Some of those shares from the IPO will probably land on Robinhood, because Robinhood is the premier retail platform, at least in my opinion, it is. people I'm sure people will ask, is now a good time to start a position in Robinhood? She's saying that right now, if you have no exposure to Robinhood, if you're bullish on the stock, if you're bullish on the company, and you're looking for that price entry, this would probably be a good time. All right. So just putting that out there in case you missed it.
Markets move.
I mean, we saw what happened with Kalshi. I heard them on CNBC this morning. The numbers were just incredible. I'm sure Robinhood will have similar type numbers, not maybe the amount of Kalshi, but really incredible. And I think this is where people like to go have fun, whether it's gambling or not, somebody else can decide. But I think kudos to Robinhood. They continue to pull ahead of Coinbase, pull ahead of just like the legacy custodians, and create a very sticky platform that once you're on there, they don't want you to leave, and they do a very good job of keeping you there.
What about on Bitcoin before I let you run? You own the IBIT, right?
Yeah. I mean, yikes, what a drawdown. I mean, I still think we've had just like such damage in the name. I know a lot of the Bitcoin enthusiasts think we're going to get a V-shaped recovery because we've had that before. I think there has been some damage done. As I said, on halftime, I added to the position last week, but I definitely still think like 56,000 to 60 right here is like the 2021 highs to the 2024 lows is in that range where it needs to settle. I'm not sure about a V-shape, but I do think you can add to the position here.
All right. There we go. Sorry, guys. I got to get some coffee and I am like not awake right now. So anyways, before I even get started on the kind of the macro news, because I wanted to cover Robinhood earnings real fast, because it's a stock or a ETF, whatever, that I actually own. I own HOW. That's my proxy for Robinhood, right? So I always like to cover Robinhood whenever it comes up. Come on, guys. You guys gotta psych me up, man. I'm over here dying. I'm trying to wake up. Okay. All right. Let's get it going, guys. Come on. Let's go. All right. So this is coming from the Kobesi report. All right. I thought this was actually really, really telling what's going on in kind of the United States. What is happening with U.S. manufacturing employment? All right. Because the ISM is above 50 now. And when the ISM is above 50, that usually signals expansion. That usually signals expansion for the United States, right? For the economy. The manufacturing sector shed 8,000 jobs in January. No doubt that has to do with AI, right? AI, automation, physical AI, whatever you want to call it. It's happening. It's happening now. Look at this, right? The manufacturing sector shed 8,000 jobs in January, according to the ADP private employment report. This marks the 32nd consecutive monthly decline, the longest streak since data began in 2010. In 2024-2025, manufacturing employment fell 154,000 and 177,000 respectively. Since the 2022 peak, 403,000 jobs have been lost, bringing the total manufacturing employment down to 12.4 million, the lowest since November of 2021. Let's see what else. The sector has now lost half the number of jobs wiped out during the 2020 pandemic. The U.S. manufacturing sector is in a recession. All right, so I thought this was very interesting. I wanted to put this out there because you have two forces. All right, so this is just my thinking. You have a couple forces happening at here, right? You have the AI, robotics taking jobs, right? You have that. The current administration, right, has been doing a lot of reshoring. A lot of those projects have not been fully realized yet, right? Whether it's reshoring manufacturing, chip manufacturing, or auto manufacturing, whatever, just manufacturing jobs, right? Those have not fully been realized yet. So I think these numbers will improve, but again, as you guys have heard the narrative all last year, the United States is not trying to, become the textile world or the textile capital of the world, right? They're trying to bring back good manufacturing, high paying job, manufacturing, chip manufacturing, that type of stuff. So this could potentially, maybe in the future, this could potentially change. But again, right now it looks pretty bad. And again, in my opinion, it is mostly due to artificial intelligence and robotics taking away a lot of the assembly work and manufacturing style jobs. So we'll see what happens. Again, there's a lot of crazy things happening in the robotic space, even for farmers right now. There's a large, I don't know how to describe it, but there's these large vehicles that can go out and start just processing, you know, fruits, vegetables, that type of stuff, right? And it doesn't need a human. It does not need a human in the driver's seat. That's the difference. Doesn't need a human in the driving seat, and it doesn't need people to go out there and, you know, actually get the produce, all right, or get the vegetables, whatever. So, you know, robots, it's coming. Robotics, it's coming. AI, physical AI, it's coming. Here's another from the Kobesi report. Big tech capex is exploding. All right, we covered this earlier in this week. I think we covered this yesterday. But big tech capex is exploding. All right. So these are all the major hyperscalers. They're putting a ton of money into, again, buying, building data centers, scaling out, you know, AI. Where's all that money going to go? It's going to go to, you know, the second, third, fourth derivatives of those, right? Of those data centers. You know, you got semiconductors, you're going to have power, and then of course you're going to have metals, right? And you know, fiber optics, all that stuff that goes into a data center. So all that spend is massive. This is the most massive amount of spending that these companies have done in a very long time. I mean, look at it. You guys can see here in this chart, you have 2023, 2024, and then 2025, and then a huge exponential jump up in 2026. Right? These companies, they're forced, you know, to spend money because they're competing with each other. This is an arms race within an arms race, right? You have obviously China and United States, they're competing for, you know, the best AI models, etc. But within the United States, you have these major hyperscalers spending money like it's going out of style, right? Because they're all competing with each other, and whoever spends the most, right? Just throw money at the problem. Whoever spends the most is going to, you know, obviously probably come out on top. At least that's what the idea is. All right, so the combined capex of Amazon, Alphabet, Meta, and Microsoft is expected to jump 70% year over year to a record $610 billion in 2026. $610 billion in capex. All right, this is nearly 3 times the $217 billion spent in 2024, more than 4 times in 2023. All right, Amazon leads with $200 billion in planned spending, followed by Alphabet at $180 billion, Meta at $125 billion, and Microsoft at $105. All right. Each company is expected to spend nearly as much in 2026 alone as they did in the previous 2 years combined or more. All 4 would individually break the record for the highest annual capex spend in a single company over the last 10 years. All right, the AI infrastructure rush is unprecedented. Guys, like this is the signal right here. All right, this is, you have all this money rushing in. You have a very favorable regulatory environment. You know, you have the White House backing all of this stuff. I mean, what's not to be bullish right now? Obviously, you know, stocks are down. It doesn't feel good. Price is not, you know, cooperating. You know, especially with some AI names or some of the semiconductor names. You know, in your waiting, it sucks. But just look at this bullish tailwind right here. I mean, they're spending money. They're going to be spending a ton of money on these projects so easily over the next couple of years. You know, this is going to be that super cycle. Everyone, you know, we talked about this big AI super cycle. It's going to happen, you know, and again, last October or last November, December, all we kept hearing, remember guys, all we kept hearing was the bubble's going to pop. The bubble's going to pop. Circular financing. You have all these companies spending a ton of cash. Now, is a circular financing a real risk? Sure. Yes. You know, you had Oracle raising a bunch of debt. You have Meta raising a bunch of debt, right? Meta got burned because, you know, they were spending too much money or intending to spend too much money. This does scare a lot of investors, right? Especially if you're in these names. You know, a lot of the institutions think that they're spending way too much when the demand is not there. Okay. So the demand is not there yet. But you have to think, this is technology. You can't have demand immediately all the time, right? Because you have to build it out. Eventually, the demand will come. That's usually been how it is for technology, as far as I know, as far as I've lived it, right? Like when Facebook came out, there was no demand, and it slowly started to build up. And then it is what it is today, right? Now it's Meta. You have Facebook, WhatsApp, Instagram. Right, the demand just slowly started to climb up for these platforms, and that's why Meta or Facebook at the time acquired those companies. I mean, that's kind of a low level like example, but you know, so that's just the way I look at this stuff. Me personally, like any one of these names, right? Any one of these names, they're gonna have all of these downstream derivatives that they're going to be supporting, right? So companies like an NVIDIA, right? Companies like a TSMC, Taiwan Semiconductor, right? Companies like AMD. And you look a level lower than that, you're gonna have Cisco. Cisco just came out with their AI chip, right? With their own AI chip for their networking hardware. I haven't even dived into that yet. That's so much to go into, but even Cisco has a part in this, right? You look a layer down below that, and then you're going to also have the power, right? We saw yesterday XLE, which is iShares, power ETF, or what is it? Infrastructure energy ETF. That's what it is. We see that they're starting their steady climb up, right? They're starting their steady climb up. I mean, we can see it right here. All right. So we covered this yesterday. Energy is going to be the next big thing because, again, it's not exactly abundant right now. You have a lot of data centers being built. You're going to need a lot of power. And now you're competing with the American household for that power. And there's just not enough to go around. So now you have to start building out the infrastructure, right? Power becomes scarce. You look a layer below that, right? You're going to have the energy that goes into this stuff. You're going to have the coal. You're going to have, solar. I mean, we covered it in another stream, of course, but you're going to have solar. You're going to have coal. You're going to have natural gas, right? That's why stocks like ExxonMobil, has been going crazy, right? We look at ExxonMobil year to date, up 23.6% over the year, 36%. Okay, you guys see this really steep climb right here. And that's because the United States needs more energy, right? I think the idea of, and this is just my thoughts, okay? But I think the Trump administration basically saying green energy is trash, electric vehicles, we don't need it because it creates a reliance on China. So let's cut all that out. Let's go back to natural gas and coal, etc. And then you need all the stuff that's going to power all of this, right? The veins, if you will. Right, that's where the coppers come in, right? The copper, that's where the silver comes in. We've covered that multiple times. But again, when we're talking about these metals, you're going to have metal that can't be recouped, right? So when we're looking at metal that can't be recouped, what does that mean? This is metal that's been blown up on a battlefield, right? This is you see and hear in the news all the warfare going on. That requires copper. That requires all these other critical minerals. That requires silver. That's not metal that you can readily just go and just recoup and then recycle. So you have metal that's essentially lost. Okay, so that creates a deficit, and that creates it makes it more scarce, right? Makes those metals even more scarce. So just wanted to point that out. All right, because I think that was really interesting, right? This right here is a really big, it paints a really clear picture of where we're heading. Okay, so I just want to point that out. Okay, so let's move on to the high yield metal funds. All right, so we have two that are coming out. Well, we have a couple. So this is from X Funds. Okay, so this is the Nicholas Gold Income ETF, GLDN. All right, not to be mixed up with GLDM. And the Nicholas Silver Income ETF, SLVX. Okay, they're launching on the 18th of February. Actively managed option strategy targeting gold and silver. The Nicholas Defense and Rare Earths Income ETF, Weapon, and the Nicholas Nuclear Income ETF, Nuke X, launch on 12/19. Defense, Rare Earth, and Nuclear Energy ETFs with income overlays. All right, so these will be coming out very soon. Me personally, I am definitely not going to be getting into either of these. It's just because I don't want them. Right? Will I enter into a gold income or a silver income producing ETF in the future? I don't think so, me personally. Is there a strong case for gold, silver, and copper? Absolutely, right? Absolutely. We know that is happening. I just explained to you guys why all this, these metals are becoming even more important. There's a commodity super cycle happening right now where there's not enough metal to go around. And the United States is doing, all these deals. Again, we spoke about the Vault project, where the United States is partnering with a bunch of, other countries to basically go in and mine, and create supply chains in those countries, get away from China. That's what the whole Greenland thing was, right? We have Kurv also coming out with one. Okay, and this is funny, right? Copper of all things, they're coming out with a copper fund. Okay, so if you're looking for a tiny little, signal of why copper is so important, obviously Kurv Investment Management, right? Kurv, they have, KYLD, they have KGLD, they have Goop, they have a bunch of Kurv funds. KQQ is another one, right? They think it's important to get ahead of the curve, and they're coming out with a copper fund. Okay, so maybe it's a telltale sign that copper could be volatile in the future. Maybe we could see some new all-time highs with copper, because copper, obviously industrial metal, just like silver, right? So as silver becomes scarcer and more expensive to have, I've seen out there in Xland or on YouTube, people saying that copper would probably be a replacement, but not the best. Okay, so just something again to keep in mind. This could be that next big thing, right? If you guys are if you're playing on themes, obviously not investment advice. Now, am I going to be getting into KCOP? Probably not, right? I like the miners. I like the copper miners. I like the gold miners, silver miners. I'm fine with holding those ETFs. I get way more growth. I'm not looking to mine the volatility, mine the volatility. I'm not looking to farm the volatility for income, right? Especially from those, because I think they're going to grow so much, and I don't want to miss those gains, right? I don't want to give up those gains for income. Me personally, I'm not saying that is a bad thing. If you're looking for, if you have like a more income focused approach to your portfolio building, then KCOP could make sense, right? These ones could make sense, but we already have so many of them out here, right? We already have KGLD, KSLV, which are some of the more popular ones from Kurv. You have GDXY from yieldmax. I feel kind of weird saying that because I know a lot of people don't like yieldmax, but GDXY is one for the gold miners, and it's actually been pretty decent if you look at it, right? All things considered, all right. Don't shoot the messenger. But yes, let's see. So we have Padre, who's one of the subject matter experts on this sector, on the commodities sector. He's saying Druckenmiller said copper is his most studied position ever. All right, Druckenmiller, I've seen some interviews of him saying that. Absolutely awesome. I'm telling you guys, copper is going to be very, very important this year. The price is not doing what we want right now, but eventually it will, right? There's a huge demand for copper, not enough copper to go around, just like silver. Okay, so these are the two new funds coming out. All right, so for all you high yield heads out there, keep your eyes peeled for this. All right, keep your eyes peeled for these two. All right, so that is that. Let me just check the chat. Let's see. So we covered that. We covered KCOP. Let's see. All right, we got Alex. What's up, man? Welcome back. All right, so moving on. All right, so this is coming from Walter Bloomberg. Don't know who he is, and this is funny because this came up. This came up in a stream, so I wanted to cover this, right? Because we're talking about FTX, and we're talking about SBF, and he's probably going to try to get an appeal. And wouldn't you know it? Right there, guys, right there on the screen. You guys see it. You guys are looking at it right there. This dude is going to shoot for an appeal. Okay, FTX founder Sam Bankman-Fried, who is behind the most notorious collapses of a crypto exchange, FTX, still burnt in a lot of people's minds, serving a 25-year sentence, filed a pro se motion for a new trial, claiming new witness testimony undermines the prosecution's case. The request, docketed Tuesday, is separate from his formal appeal. All right. I saw some other posts on X. Actually, he does have SBF. I think it's SBF FTX. Yes. So he actually did make a tweet, or someone made a tweet on his behalf. So he is posting, right? And he posted this. Agree with almost all of this. This was 15 hours ago, but FTX was never bankrupt. I never filed for it. The lawyers took over the company, and 4 hours later, they filed a bogus bankruptcy so they could pilfer it for money. All right. So you guys could see here, like this is absolutely crazy that this is coming up. And I guarantee he's going to get that appeal, or he's going to get a pardon by Trump. 100% would not be surprised by that. His family, you know, his mom and dad are pretty powerful people with a lot of connections. If you dig deep enough. All right. So then, you know, he's basically saying that lawyers pilfered, you know, FTX and then put it into bankruptcy when it shouldn't have been. And had they not done that, FTX would still be solvent, right? But because they placed it into bankruptcy, that's what, you know, one of the dominoes that, well, maybe it was the final domino, but that was basically it, right? That was one of the dominoes that caused FTX to basically go in the trash can. But again, don't get me wrong, I still think SBF did a lot of bad crap. That whole scam was pretty bad, and the way their marketing was, this is why let me go on a quick vent right here, quick rant. This is why I am so mistrusting of a lot of things I see on YouTube, because there was a lot of YouTubers who were pumping FTX at the time, and some really good YouTubers I look up to, right? People who've helped me on my own personal journey, right? Names like Graham Stephan, probably the poster child for finance, right? The poster child of finance world, or finance tube, right? He was caught up in it. Then you had, you know, obviously Meet Kevin, you had Andre Jick, you had Jasper Singh of what is it, Millionaire Mindset or Minority Mindset. You had all of these YouTubers. Joseph Carlson was another person, right? He wasn't pumping FTX crypto, but he was pumping FTX stock, right? Or FTX, you know, investing in their brokerage. All these people, all these followers were investing in FTX, putting their money in FTX, moving their crypto to FTX, everything. And then it just collapsed, right? It collapsed. These guys took the sponsorship money, happy about it, no qualms, and you got a sorry video. You out of everything. Now, did they get got, right? Probably so. But again, that is why I'm extremely mistrusting of a lot of content I see personally, right? And this is what causes me to do a lot of digging, a lot of due diligence, right? A lot of, you know, looking for the actual context of stuff, because I don't want to mislead people. That's one big thing. I would hate to mislead people. But two, it's because I've been misled. Right? I could have been misled into something like an FTX and lost a ton of money, right? And hearing the stories of in the aftermath of that was heartbreaking, because people had sunk, you know, their kids' college earnings or their kids' college tuition in there. People putting, you know, their whole lives in FTX, and then it just seemingly gone, right? So I thought, again, just my little rant for the day. I'm going to get off that topic now. Anyways. All right, so we have some news about silver. Okay, silver was out. Silver news is this coming from the Kobesi report. Silver inventories on the Shanghai Futures Exchange are collapsing. Shanghai silver available for delivery is down to just 350 tons, the lowest since 2015. This marks a negative 88% decline from the 3,000 ton peak seen in January 2021. This tightness has been exacerbated by heavy silver exports from China to London in 2025, which alleviated the global physical squeeze, but depleted local stocks even further. All right. The physical silver market has rarely been this tight. Shanghai Futures, obviously a big player in the silver's market. They have almost no silver, right? Again, we've talked about this, the manipulation of the market, of the silver's market, because they're selling and trading silver that doesn't exist, right? How can you trade or sell silver that's not there? So that was a big piece in all of this, right? We saw, well, this is not the correct chart for that, but we saw silver reach this crazy parabolic high and then a very, very steep decline. Okay. That was in part due to investors taking profits, right? We saw that the Shanghai Exchange Silver Futures exchanges, they started raising margin requirements. They just did it again from 15% to 18%. So people who are trading silver, you know, using a lot of margin, they just increased the rate, right? Because this has become an extremely volatile asset. But if you look a little bit beyond that, again, going back to investment instead of trading, if you look beyond that, we see that silver is in extreme demand, not enough silver. Okay. Not enough silver. It's going to be a metals year for sure this year. Again, scarcity, abundance, right? And invest in scarcity. Don't invest in abundance. That's going to be the theme for this year. And I'm taking that line from Jordy Visser on YouTube. You guys can check him out. But I agree 100% with that you should invest in scarcity. All right. That's going to be the theme. I think that's going to be the macro play for this year, especially with everything going on, right? We still have quantitative easing coming. We still have interest rates coming, or interest rate, cuts coming. We still have a new Fed that's coming in. There was some news about, whether Trump was talking about Kevin Warsh, because he was backtracking and say, oh, I didn't like the guy, but my Treasury Secretary, said to go with him. But really, that interview was for a year ago. That was making its rounds on X. So just wanted to clear the air with that one, that Trump, his pick is still Kevin Warsh at this moment. Could that change? Absolutely, because Trump likes to change his mind every other day. So just wanted to cover this, especially for those silver heads out there, or those metal heads who might, either want to consider a position in a silver miners ETF, silver commodity spot price ETF, or hold the actual, silver bars, or again, as we just covered, you're going to have the silver funds coming out, right? Again, I think Kurv probably has a grip on that market already because they came out with K-Silv and KGLD already, right? So I think they already took a good portion of the market share from that. So just my thoughts. Here, more news about copper. All right, so here we go. The U.S. and this is coming from bar chart. The U.S. has built its biggest copper inventory in more than 30 years, holding close to 600,000 short tons. U.S. copper stockpiles and exchange approved warehouses have been building since the start of 2025. This is a signal, right? This is a bullish signal for copper. So when you see things like Kurv also coming out with a copper fund, I wonder why, right? I wonder why. They must have done some research and figured out that copper is going to be the next silver, right? It's going to be the next silver. We got another chat here. Vanadium is barely being mentioned. Russia cut off supply in October. Well, there you guys go. All right. He's sharing these gems. Vanadium. I've never even heard of that metal. I don't even know what that metal is. I got to look this up. Hold on. Vanadium. Vanadium oxide, pentaoxide, yeah, hold on a second. Let's say use. Okay. Vanadium uses. Vanadium is a vital industrial metal primarily used to strengthen steel alloys for construction, automobiles, and tools. Over 80 to 90% of usage. All right, I hope you guys can see this. Let me zoom in for you. All right. Steel alloys, titanium alloys. Is a critical catalyst in the production of sulfuric acid, which is used for manufacturing, dyeing, and printing fabrics, construction infrastructure, used in strengthening railway tracks, and structural steel for major construction projects such as skyscrapers and stadiums. The GSA Environmental states that vanadium strengthens steel for transmission towers while reducing their overall weight. Interesting. Well, hey, there you guys go. I mean, I'm learning something new about metals every single day. So yeah, whoops. Comic book. I see your comment there. I'm not going to put it up because I don't want to get in trouble I don't want the YouTube gods coming after me. All right. Anyways, guys. So we have some news about Michael Saylor. All right. He was on CNBC. This is a fresh video. I just want to cover it because, again, they've been coming over. They were all the news last week, right? I said that, there's no way in hell that they can get liquidated. I mean, based on that earnings, presentation that they had, there's no way in hell that they can get it. When they're sitting on 65, 68 billion, or is it 60 billion worth of Bitcoin, and they have to pay an $888 million dividend a year, and they already raised about $2.5 billion to cover that dividend, for 30-ish months. I mean, where's the liquidation event, right? Just because Bitcoin dropped below their cost basis, that's a liquidation event. That was the stupidest argument I've ever heard. But anyways, guys, let me get into this.
Big story of the morning, Bitcoin. Prices remaining pretty volatile. We are still under 70,000 right now. Strategy, though, is buying more, adding about $90 million worth to its stockpile. Joining us right now is Michael Saylor, Strategy Executive Chairman and Founder. Doubling down, sir, at a time when others have gotten pretty nervous about what's going on. Want to get into your business and so much more, but just speak to the way you think the price action and movement has taken place. A lot of people trying to come up with an explanation, and I'm curious what yours is.
I think the key to keep in mind is that Bitcoin is digital capital. It's going to be 2 to 4 times as volatile as traditional capital like gold or equity or real estate. It's got 2 to 4 times the performance this decade of traditional capital. It's the most useful global capital asset in the world. You can put more leverage on it. You can trade it in more ways than any other kind of capital asset. So the volatility is the bug, but the volatility is the feature. And we believe that digital capital, because it's so much more performance, is the basis for an entirely new set of financial instruments that we call digital credit.
Is there any argument to be made, though, and given that that Bitcoin has sort of done a round trip since the beginning of this administration, that we are now finally getting to some kind of price discovery moment that's fundamentally different? That in the past, Bitcoin, because it wasn't in ETFs, because it wasn't as broad-based, that there wasn't the kind of price discovery that's now available today, and maybe these prices are more realistic than what had been the case before.
Well, there's no doubt the asset is seasoning, and that's a good thing. We just had an all-time high, Andrew, 4 months ago, October 6th, I believe. So if you've got a time horizon of less than 4 years, you're not really a capital investor, you're a trader, and the traders are having a field day with the volatility, good for them. But the capital investors are looking out 4 years, and if you look at a 4-year time frame, Bitcoin is 2 to 3x the performance of the alternative capital assets. And anything built on Bitcoin over a 4-year or more time frame is going to outperform for the same reason.
The concern, as you know, about strategy itself, to the extent that there are worries within the Bitcoin community, is that, you know, if Bitcoin continues to fall, and I know you've made the argument that you have enough cash on hand to handle this for the next 2 years, that there could be a moment at which you have to sell, not buy.
Yeah, that's an unfounded concern. The truth is our net leverage ratio is half the typical investment grade company. We've got 50 years worth of dividends in Bitcoin. We've got 2.5 years worth of dividends just in cash on our balance sheet. So we're not going to be selling. We're going to be buying Bitcoin. I expect we'll be buying Bitcoin every quarter forever.
Just so we all understand, what is the price at which this story gets much more complicated for you and therefore the rest of the Bitcoin community? I think. So
he's asking, Sorkin is asking, basically, when does Bitcoin, how low does Bitcoin have to be for MSTR to get liquidated or MSTR to run into problems or the such, right? That's really what he's asking.
There's a sense that given how large a player you are, if the price of Bitcoin were to fall to a place and continue to stay there for 2.5 years from now, and you were forced into a selling position, that unto itself could create a cascading problem.
Andrew, if Bitcoin falls 90% for the next 4 years, we'll refinance the debt.
Refinance where, Michael?
We'll just roll it forward. I mean, again.
But you think banks would lend to you at that point?
Yeah, because the volatility of Bitcoin is such that there's always going to be value. Look, you're at 68,000 right now. Literally has to fall to 8,000. Then we just refinance the debt. If you think it's going to zero, then we'll deal with that. But I don't think it's going to zero, and I don't think it's going to 8,000 either. But the credit risk is de minimis at this point.
I guess the bigger question is, I know you have a stock of cash that you can use to continue to pay out the dividends and beyond. How long does that carry you through?
2.5 years, Becky.
I thought you had some.
We've got 2.5 years of cash. We wouldn't have to raise any money.
Okay, so
put this in
that includes the
perspective.
debt. That includes the debt due next year as well.
We have 2.5 years of dividend coverage and debt coverage in cash. We raised $4 billion this year so far. We raised $25 billion last year. There isn't credit risk to the company. The story,
just as a reminder, all right, because Becky, what she's trying to get him, or what she's trying to drive, the point she's trying to drive is that what happens after that cash pile runs out, right? And you still owe, money for the dividend, what's going to happen then, right? Very likely, because it's MicroStrategy, what they're going to do is just sell the common stock, right? It's actually listed in the press releases or whatever the prospectuses for these common stock or for these perpetuals. That strategy will just sell MSTR common stock and to pay the dividend. Is it crappy for MSTR common stock shareholders? Absolutely. Does that make a whole lot of sense? Not really. But again, when you're banking on Bitcoin going back up to all-time highs, strategy, because MSTR, because it's supposed to be a proxy, for Bitcoin, a leveraged proxy, then that should offset any of the, dilution. It should offset any of the price decline. At least that's kind of the thought, that's kind of the thought out there.
here is that the digital credit, STRC, is the most popular credit instrument of the decade. It's trading 100 times as much as traditional preferred stocks, and it generates 2 to 4 times the cash flow of any other fixed income instrument. So that's the revolution taking place. There isn't any credit risk in the balance sheet of the company.
Why do you think the stock's down 60% over the last year?
The company's engineered to be amplified Bitcoin. So when Bitcoin goes up, we go up faster. When Bitcoin falls, our volatility is higher. We've created an asset that's got an 80 vol. And so the stock falls because Bitcoin's been in a bear market for the past 4 months. It's been an extreme drawdown. But at the same time, the other day we had a 25% increase in the stock price in a single day. Our stock is more liquid, on a market cap basis than any of the Mag 7 stocks by a factor of 2, 3, 4. The open interest is the greatest open interest of any of the major stocks in the market. So that volatility creates interest, creates liquidity, creates the opportunity for us to issue the digital credit.
Michael, can you help us with one thing? There's some folks in the community, the Bitcoin community, that believe that there's a floor on Bitcoin at around $60,000 because that is the average price that is effectively or cost, I should say, for miners, and that as a result, the arbitrage will always be around that price. I don't know if you think that's true or not, or whether you think there's a possibility that you could fall below that, in which case, what happens to those miners? Obviously, for Bitcoin to be successful in this sort of decentralized world, you need the miners to be mining. Otherwise, the whole thing doesn't work properly.
If you're focused upon the price dynamics of Bitcoin, I think it's much more interesting to look at what the banks do, because as the large banks roll out credit against BTC, and you see a lot of enthusiasm from Citi, from Schwab, from JP Morgan, from BNY Mellon, et cetera. As they roll out credit, they're going to negate the miners' influence by a factor of 10. Also, the embrace of large Wall Street firms, the rollout of the next BlackRock Bitcoin Income Fund is going to have a big impact. And of course, the growth of digital credit that we're issuing. We sold $7 billion last year. We sold $400 million in a few weeks this year. So the issuance of that credit on top of that network is going to be 10x the price impact of anything that the miners do or don't do. They're really a third order effect at this point in the future of the network.
Real quick, if you were to make a prediction about where Bitcoin is, call it 12 months from now, what do you think?
I don't really make predictions over 12 months. I think the Bitcoin is going to double to triple the performance of the S&P over the next 4 to 8 years. And I think that's the only thing we need to know.
Michael Saylor, always good to talk to you. Thank you, sir.
Solid, man. Solid. So for any Bitcoiners out there, Bitcoin maxis, et cetera, even if you hold IBIT shares, right? Like I do, I hold IBIT as my proxy for Bitcoin exposure. A lot of things to be bullish about. just got to be patient, right? So, some thoughts that came up, right, during this, because a lot of people, they wonder, how bad can MSTR actually fall, right? Because I've said some price targets out here, and this is based on, just videos I watch or X, technical analysis, that type of stuff. I don't do technical analysis. I'm just saying, like, other people I follow or watch, they're calling for about, $50 to 75 MSTR, right? And I was wondering, like, how are they coming to this number, right? I'm not going to do charting, right? But how are they coming to this range? And really all you need to do is think of the drawdown for Bitcoin, right? The drawdown for Bitcoin and MSTR have been about 90% at its worst, okay? 80 to 90%. So you just take the all-time high of MSTR, which was about $455, whichever you want to choose, and you just subtract 80 to 90% of that. And those are the price targets, right? That's if we continue the downward trend, which I think we are. I really do think we're going to see, Bitcoin in the 50s. And then for me personally, that's when I'm gonna also deploy a big tranche of dry powder in there. If we dip even lower, well, I'll probably dip a little bit more in there, right? If it keeps on dipping, I don't know after that, right? If we start reaching the 30s, I don't know about that, right? I'll probably dump a little bit more, but I'll probably be tapped for powder at that point. But you relate that to what MSTR could potentially do, or how bad the drawdown could potentially be, and then that's how you kind of come to these price targets. So I'm not saying that, that is all fact, that it's all based in TA or anything like that. That is just very quick surface level napkin math. All right. Cool. So just wanted to cover this because, again, they were the main story last week. And I think, that story is going to continue, especially with Bitcoin's volatility, especially when we have another Bitcoin drop, which is coming. It is absolutely coming. You're going to see it all over X. You're going to see it all over in Discord communities. You're going to see it all over YouTube, all over social media, Facebook. The sky is falling. Bitcoin's going to zero. I've seen some really, really dumb fake emails out there of a certain person, right, whose emails have just been released by the government, basically saying, "Oh, we've been, that he is Satoshi, right? The Bitcoin was his product." Absolutely fabricated. The emails were completely fabricated. But again, people on X, they eat this up. People on YouTube, they eat this up as fact, and people on Facebook eat this up as fact, right? And then they end up selling out of their Bitcoin, right, or whatever, right? So hey, just keep an eye out there, all right? A lot of fake news is there. So Amazon gets FCC approval to launch 4,500 LEO internet satellites. So this is putting them in direct competition with SpaceX, or Starlink, right? Starlink is what I meant. So yes, this is putting Amazon directly in competition with Starlink. You got to imagine Starlink already has a ton of satellites in space. Now Amazon's going to be launching even more. I can only imagine how much junk is up there in space. Like, we're already dirtying space before we even really get there. The FCC authorized Amazon to deploy 4,500 additional LEO internet satellites. The new tranche would bring Amazon's planned constellation to roughly 7,700 satellites in space. LEO is poised to rival SpaceX's Starlink, which has more than 9,000 satellites in orbit and roughly 9 million customers. All right, so we have Amazon again, Jeff Bezos entering in the fight, for space and for space internet. It looks like we have some breaking news. China consumer inflation rises less than expected. Well, that's good. All right, Palantir, I see we're going on almost an hour, so I'm going to try to end this out, end the stream out here real quick. So Palantir extends multi-year data platform contract with Airbus. All right, there's really only two major airline manufacturers in the world. That's Boeing and that's Airbus. All right, but again, this is showing that Palantir's software can be used commercially. Okay, not just for government contracts. I keep bringing that up because I think that is important to Palantir's story. Other companies can start to use Palantir commercially for their own, manufacturing, their own logistics, their own data analytics. There's that big thing with the mortgages, right? One of the companies, I think it's Fannie Mae or Freddie Mac, that actually use Palantir to detect fraud. More government agencies will probably start using it. I know Palantir is they're doing some work for the IRS. right? Instead of hiring 40,000 IRS agents like they were planning way back in 2018, 2019, instead of doing that, instead what they'll do is just install Palantir, right? Install Palantir. But again, that is not public. That is not the case yet. I'm just, kind of thinking out loud here. But again, Palantir is the use case for that software is insane. Palantir Technologies on Tuesday said it signed a multi-year extension of its agreement with Airbus, continuing its role as a core technology provider for Skywise, Airbus's data platform for civil aviation. The renewed contract formalizes an ongoing relationship that dates back to 2015 and centers on Skywise, which aggregates aircraft operational and engineering data used by Airbus and airline customers. Financial terms of the agreement were not disclosed. All right, so again, for me, bullish on Palantir. China's about to eat Airbus and Boeing for lunch. Do they have a company? I haven't heard anything about them, about a Chinese company coming out. New York Fed consumer delinquencies hit highest level in nearly a decade. This is obviously not good. All right. So this is basically the consumer being squeezed out by debt. Total household debt increased by $191 billion to reach $18.8 trillion in the fourth quarter of 2025. Holy hell. All right. According to the Federal Reserve Bank of New York, latest quarterly report on household debt and credit, at the same time, consumer delinquencies climbed to their highest level in almost a decade. People are not paying their debt. How can they when there's no jobs, right? Or they're getting laid off, et cetera, right? That is not good. Obviously, that's not good. That's a sign, especially for the broader market. I don't mean the stock market. I mean the economy. When you have people who can't pay off their debt, that is a sign that people are not working, right? That they're drowning in debt, and they're going to have to choose between rent, electricity, food, or paying off this credit card debt. So that is definitely not a good sign. In addition, home equity lines of credit saw their 15th consecutive quarterly increase, probably because people are taking out HELOCs and putting it into high yield ETFs, and then the ETFs imploding on themselves. I'm just joking, of course, or maybe, I don't know. There's some truth to that joke. Rising by $12 billion to $433 billion. Look at that. Right? It rose from $12 billion to $433 billion. All right. Continuing an expansion that began in 2022. Also, approximately 58,000 individuals had new foreclosure notions or notations added to their credit reports, an increase from the previous quarter. So that is not good at all, guys. All right. Last part. Okay. Last part. And then we'll open up the line, or I'll just chat with you guys for a couple of minutes. All right. So this is the little challenge that we're doing in the Discord community. It's obviously closed right now. Like, whoever has the best portfolio by the year end, right, with the most capital gain, I suppose, is going to win a cash prize of $1,000 or 1,000 USDC, right? So I just wanted to cover this. I wanted to, kind of integrate this into the stream. I might start pushing this one at, way in the beginning, just to go over real briefly at a high level. But we could see that so far, let's see, for myself, I'm almost down 10%, right? But we have Citizen of the Year, who's another YouTuber. You guys can check him out. But he's down 10%. But this dude went all in on MU, right? All in on MU, Micron Technology. We know Micron had a really crazy year. Let's see what their stock is at right now. So MU, right? And again, maybe there's more to the story, because MU, SK Hynix, we have SanDisk, we have Samsung Technologies. They create DRAM, and DRAM right now is all the rage, and it's very, very important. But not too long ago, look at that. We'll start. Let's see, right here from the lows to the highs, 540% over the year, right? Insane. But I was mentioning it. I said it several times. The more parabolic it is, the more steeper the decline is going to be, right? And we saw that happening right here. Boom, down already almost 15% for the month, right? That is crazy. If we look at the 1 month, they were climbing and then they're down. So Yeah, I suspect this is going to correct a little bit more. It's definitely going to correct more for sure. Because I mean, that was crazy. That's a crazy gain. And it was so under the radar. Very few people, if any, were mentioning Micron. And just look at this crazy, crazy incline. All right. So going back to the airplanes, Padre says, yes, China has big competition to take over the 747 market. All right. So the 747 is the jets or the plane, not the jets, but the big planes that, you know, you can fly on international, mostly international trips. But anyways, wanted to cover that. All right. So let's see. So yeah, for me, just going to go down my holdings really fast. So the challenge was you had to pick 10 holdings, right? 10 individual stocks or spot price ETFs. So no, you know, no high yield, no leverage ETFs, no baskets, no index funds, no sector thematic ETFs, none of that. It had to either be spot price, you know, for Bitcoin, gold, silver, etc., or individual companies. So these were the 10 that I went with. I went with CoreWeave, I went with Ondas, BMNR, MSTR, GLD, IBIT, NB, I forget, yeah, not Neocorp, USAR for rare earths, UAMI for antimony, and then Palantir. Right, there was some news with UAMI. I think they partnered with USAS is the ticker for a project. I can't remember. I just saw it in Robinhood, but yes, they had some news come out for them. There's news for a lot of these guys. I can't keep up with all of it. But yeah, these were my picks. I wanted some data center. I wanted some drone, you know, obviously some crypto exposure, obviously some gold, and then some heavy metals or some metals, software, and of course, Bitcoin, right? So let's take a look right now. So again, I'm down 10%. It looks like that's the total change. So that's the total return. I'm down 10%. We have Theta Decay, another member in the Discord. He's actually down only 3.66%. We have Velocity Portfolio. Recommend you guys check him out. Shout out to you, Rob, if you're watching. But Velocity Portfolio, let's take a look at his portfolio. He went with ASTS, Space Mobile, Rocket Lab, JP Morgan, Meta, Netflix, Google, Broadcom, Costco, Amazon, and Palantir. Okay. So he's down almost 6%. For Theta Decay, he went with UPS, UNH, SMCI, Palo Alto Networks, which is, you know, similar to like a Cisco, networks, NVIDIA, MSTR, Microsoft, Meta, JP Morgan, and Salesforce. Let's see what else we got. Evil Duck went straight into, he's another member of the community. He went straight into just all metal miners, right? All metal miners. Although one is just not doing, it's not populating, which is, I don't know. I think this is what is affecting this right here. His data. So I have to figure out what's going on. I just have not had a chance to actually sit at the desk. So yeah, looking at this, I don't even know most of these tickers. So we have the copper index. Again, that's probably a really good pick in my opinion. OR Royalties, Silver, the Silver Trust, of course, got some silvers. TSM Taiwan Semiconductor, Aya Gold and Silver, Quad U, which is Energy Fuels Uranium, if I'm not mistaken, CCJ, Comico, WPM. Oh, Wheat and Precious Metals. Yeah, so Wheat and Precious Metals, really interesting company, and something I was looking into. Didn't do a lot of due diligence on them. But what they do is they're basically like a BDC, right? They're a business development corp. What they do is they loan money to these miners in exchange for a stake in some of the metals that they discover, right? So it could be copper, it could be gold, it could be silver, it could be anything, right? And they basically make royalties off of that. So I thought that's a really interesting business model. WPM, their stock price actually looked really, really good. If you look at their chart as well, looks really, really good. The company, there's a lot of YouTube videos on the CEO talking about, WPM. So if anyone's interested, recommend people check them out. SCCO, Southern Copper Corp. I believe that's Canadian, if I'm not mistaken. I could be wrong about that one. Or this one, Homeland Nickels, Canadian. Anyways, that's for Evil Ducks. We have Citizen of the Year down 10%. We have Super Straight Guy. All right, Super Straight Guy, again, just going over his holdings. Another guy who's usually in the chat. But he went with gold. He went with Costco, JP Morgan, IBIT, Amazon, CrowdStrike, Palantir, MSTR, Tesla, and NVIDIA. So you guys are seeing a lot of these repeat names, right? You're seeing a lot of the repeat names. We have Dividend Rocket. He runs a YouTube channel. Recommend you guys check him out. He went with some kind of names I've never even heard of. So we have UNH, Micron, BM&R, SanDisk, CrowdStrike, Costco, Amcor. That's the one. I've never heard of Amcor before. I haven't even looked at what they are. Arista Networks, heard of them, Goldman Sachs Group, and Google. All right. So you guys can see some of these financial names keep reappearing, JP Morgan or at least Goldman Sachs. We have Bankshot Bobo, who's also in the community. He went with CoreWeave, Lockheed, or not Lockheed, L3 Harris Technologies, which is a defense contractor. So that was interesting. He went with UAMI, just like I did, Antimony, ASTS, MSTR. This one I did not, I've never even heard of this company. All right. I think obviously it has to be probably a Chinese mining company. At least I think so. We have Amazon in there, Micron, Lam Research. That's interesting. And Novo. I think Novo just took a massive dump. Let's see. Yeah, I think Novo just took a massive dump. Anyways, Bankshot Bobo is down 4.65 so far. And then Dividend Rocket is down to 2.6%. All right. So not too bad here. All right. Serial Bagger. This is funny. This one is funny because Serial Bagger, he didn't even try. And he's doing the best. Technically, he's doing the best. Right. He basically spelled out his name, Serial Bagger, as his picks. I don't even know what these companies are. Barrick Mining. Okay. Lowe's Corporation, Agilent Tech, Ryder Systems, NESP. I don't even know what this is. Yeah. Anyways, he basically spelled his name out in stock tickers, right? And he's down the least. Absolutely crazy. We have OK, which is Alex in the chat. All right. So Alex is out here. He went with a couple names as well. All right. So he went with Palantir, Amazon, Home Depot, Walmart. And I mean, Walmart's just became $1 trillion market cap company not too long ago. So Walmart is part of the $1 trillion club. Who would have thunk it, right? You have Spotify, which I thought was an interesting one. Holy crap. 14%? Damn. Okay. Tesla and American Eagle Outfitters. That one I found interesting. I didn't even know they had a stock ticker. Okay. So anyways, we have Padre in the chat. So this is Padre's portfolio. He went with obviously all commodity based mining companies, right? For precious metals, rare earth, or critical minerals, or et cetera, right? So we have Atlas Lithium Corporation, we have UAMI, Silver Tiger Metals, Asia Broadband. So for any of you guys looking for stock tickers regarding commodities, this is a list I would start your research on if you're interested. Not financial advice. Not saying these stock tickers are going to do well at all. All right. I'm just saying that, he's the guy. All right. He's the guy I listen to when it comes to these tickers. You guys can do your own research. All right. You have Neocorp, just like I do. Tectonic Metals, I can't even pronounce that. Something middle. Highlander Silver Corp. And then this one, which will not populate for some reason. I've added it, re-added it. I don't know what's going on with this, but Atlas Critical Minerals Corp. All right. So he is actually doing pretty well. He's in the green. I think he's the only one. See, if this populated, this is why this is not showing, but if it populated, I'm sure he'd probably be somewhere in the green, right? So far, he's the only portfolio that's in the green. Evil Ducks, I don't know what's going on with his. Pay Me and Dividend, another YouTuber out there. So Pay Me and Dividend only went with 4 stocks. Okay, so he went with Netflix, Reddit, Coca-Cola, and Dateline Resources. All right, so he's actually doing pretty okay. Well, I guess not. He's down 6.26%. All right, so anyways, the challenge was, again, you start with a hypothetical 100,000, and then you just let it ride for the rest of the year. You can't change out of positions. You can't add. You can't remove. Nothing. You got to just ride with this all the way to the very, very end. So you guys got to see kind of the portfolio challenge. Kind of what tickers are in there. I'm sure some of you guys might have some of these tickers in your own portfolio. And we're just going to see who wins, right? You guys are going to watch this with me as we go, as time goes on for this whole year. So right now we are at the 1 hour and 15 mark. All right. So I will stay here another couple of minutes in case anyone wants to hop on and talk about anything at all. All right, just remember to please keep it PG. Don't be bringing up no files. All right, don't be bringing up no politics. All right, no politics up in here. But I put the link in the chat in case anyone is interested. And I know we still have a poll, so I got to check that poll real quick because we started it at the beginning of the stream, and unfortunately for StreamYard, I can't see that poll. I could for OBS, which was nice. And unfortunately, no, there we go. Okay, so the beginning of the stream, we had, do metal high income ETFs excite you? 81% of you said hell yeah. And then we had 9% of you said no thanks, I buy stocks instead. And then 9% of you said laughs in Bitcoin. So that is awesome. I honestly, again, am probably going to go with the no thanks, I buy stocks instead, because again, for me personally, I want more upside. I don't need the income, per se. I mean, it would be nice, but I don't need it, honestly. And again, there is this massive rotation happening in the commodity space, which could be really, really good for these individual stocks or these high yield income ETFs that are coming out. But I also like the idea of having, let's see, how do I put this? A lottery ticket. I like the idea of a lottery ticket, and then it, 100%ing over the year, and then I can just sell out and just, use that or reallocate that. Right. I like that idea as well. Don't get me wrong. The income aspect is appealing. I just personally don't want it. Not for the commodities, because again, I want to capture as much upside. I have thought about in the past going with something like a GDXW or a GLDW or even a KGLD or probably a KGLD, right? Because I wanted to harvest the volatility of gold, or miners, like a GDXY, from yieldmax. I thought about that at some point. I just never pulled the trigger because again, I want to kind of move most of the portfolio away from high yield instruments. But I'm not saying that high yield instruments won't have a part in my portfolio at all either, right? Because I still do like the high yield space. I do still like high yield ETFs. All right, so I'm going to go ahead and end that poll. So thank you guys for participating. So Eric Mark says no one did dividend ETFs. Maybe like SCHD, which is interesting because SCHD is, well, no, we can't have dividend ETFs in this challenge. So no dividend ETFs. You can have dividend stocks, like Walmart, JP Morgan, Costco, etc. You just can't have any broad-based, thematic, sector-based, or specialty ETFs in this challenge. It's all single stock or commodity or spot price commodity ETFs. So that was pretty much the competition, because it's interesting. You get to see kind of like what everyone's thinking, because you can go out and choose like an S&P 500, right? You can go out and call it a day, right? Or you could just go with a leverage, a 3X, triple Q, and just go all in on that and then just leave it alone, right? That kind of takes the fun out of stuff. This challenge, at least, especially with the cash prize, I started off at $100 because I just wanted to see who was interested. And then after the challenge closed, I increased it to $1,000 because, I wanted to at least reward those who are going to take this challenge a little more seriously. So, it's a little prize, a little better of a prize out there. So it's just, it makes it a little more fun. You have to use a little more critical thinking in your picks. Unless you're a serial bagger over here and you just, created your name in stock tickers and you're actually doing pretty well. Yeah, here we are, serial bagger. That is crazy. That is so crazy to me. This dude really just chose random stock tickers and his portfolio is doing pretty damn good. That is crazy. So for right now, Victor Crooks, i.e. Padre, he's the only one that's green, right? He's the only one that's green. But I don't know like what the situation is with this one. This one could be red for all I know. I mean, let's pull it up and see what happened. Yeah, see, I don't even have chart data. Seeking Alpha is a problem with this one. Hopefully it'll fill throughout the year and then we'll get a more accurate number. If not, I have everybody's tickers. I have everyone's lot numbers. When they bought, share price, how how many shares, etc. So I can always upload it to like a portfolio visualizer or something, and then just come to a final number at the end of the year. So, you know, try to keep it fair. Try to keep it fair for sure. But all right, guys. Well, that's going to do it for me. All right, ladies and gentlemen, I appreciate you guys joining in on this stream. Really hope you guys got some entertainment, some value from it. But with that being said, I'm going to get going. I got things to do. As always, I appreciate you guys joining. Have a great night, a great rest of your evening, wherever you are in the world. And I will see you guys in the next stream. Take care. Well, I would end the stream if I could find the button. There it is.